morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Wow, hard to believe, Brady. It's the end of May already, just about the beginning of June. Welcome to Investment Talk TV, and good morning, Brady.
Hey, good morning. Happy to be here. Starting to feel like summer almost out there.
It is. I think we had an 88-degree temperature day earlier this week.
Yeah, then it cooled off a little bit.
I know, it went down to like 40 degrees or something.
Yeah, what a swing.
I know. It's crazy. Well, wherever you are today, we're sure happy that you're joining us on Investment Talk TV. It's a great place to be on Sunday morning. And, you know, Brady, I get a kick out of it because during the week, we get calls from people who actually watch the TV show.
A lot of calls, actually.
I know. Yeah. And we really love that, obviously. It's a great chance for us to meet the people who are our viewers and help them if we can. And just a reminder to you that wherever you may be, if you've got a question about your investments or your retirement plan, you're welcome to give us a call at 701-365-8083, or you can email us at that famous email address, Brady. What is that, son of a gun?
Team, T-E-A-M, at legacywealthfargo.com. You can give us questions, compliments, of course.
Naturally.
And, the occasional insult's fine as well.
Well, anyway, wherever you are today, and, speaking of wherever you are today, we're pretty proud about the fact that we are being carried throughout the entire state of North Dakota. A good deal of Minnesota, even parts of South Dakota can get our signal. And I believe there are about 11 people in Canada who can actually receive the signal, too.
Absolutely. They have to use tinfoil to get to it.
On their hat.
Yes, it's not easy, but it's doable. Also, the magic of YouTube, as we always like to say, very easy to tune in there. Legacy Wealth Fargo, search that up on YouTube, and there we shall be.
Yeah, we'd love to have you check into YouTube and become one of our regular subscribers to YouTube TV. However that works, I don't really know how it works.
Yeah, you can subscribe, get notifications if you like. Also, Paul, I want to mention, pretty excited about our new fancy coffee cups we got here. If you're looking to join the team at Legacy, you can come in and talk to us, have a cup of coffee. We might even let you score one of these sweet new mugs. Perfect for on the boat this summer.
Now, will they get a new one, or do they have to use one of your used?
Well, this one will be spit shine clean, so just like new, almost new anyway.
Well, anyway, we're happy to see people when they do get a chance to come in and see us, and we obviously follow the various COVID regulations when we can. In particular, right now, we're making sure that we keep everything clean and neat and fully sanitized, and it's a pretty good thing to do. We've got a special guest coming up in a few minutes here on Investment Talk TV, but before we get to our special guest, Brady, there was a question that I was asked earlier this week about investing and retiring and what are some problems that people have. And here was the actual question. What's the biggest mistake that people make when they are investing with retirement in mind? What do you think the answer to that is? The biggest mistake that people make when they're thinking about investing or retiring?
That's actually a really good. I would say not using Legacy Wealth.
Well, yeah. Okay, we got that.
In all seriousness, I would say probably, a lot of people, it's their life savings. They spend all 30, 40 years working somewhere, and this is all I say. They treat it very emotionally. And you make decisions based on, feelings and nerves and things, and maybe not making the most logical choices to ensure that you're having an income in retirement. That's probably the biggest and most common mistake that I see from current clients and also, prospects that maybe have questions as well.
It's funny, Brady, because you and I obviously thinking almost exactly alike. I answered it almost exactly the same way, and I said, we've got to find a way to separate the emotion from your investing and retiring. And the second thing is that people have to realize when they're investing, especially for retirement in mind, they're not looking at the next week, the next month. They're looking at long term.
Yeah.
Because most of us, hopefully, are going to be around for a long time. And it's important that people not just be looking at the next, think about last March, Brady, when the market went down, down, down.
Yep.
And we really didn't get very many people calling and saying, hey, I need to jump out of the market.
No, and it's interesting because I actually had this conversation with one of our clients, and he said, I would love to take half my money out right now and just wait for that market to take a dip, and then I could jump back in.
Yeah.
And a lot of people probably feel that way, especially from an emotion standpoint. The problem is, if you look historically speaking, people that try to time the market tend to fail or at least underperform the rest of the market. So as tempting as that might be, make sure that you're not thinking with your emotions and you're using the best logic possible.
Good answers to a good question, Brady. Here on Investment Talk TV, the advisors at Legacy Wealth Management, well, we do some of the same things that we do back at the office, and that is we try to take a look at the economic conditions that are out there, what's causing the market to do well. We also like to take a look at local economic conditions, and there is no bigger group in the state of North Dakota and most of Minnesota than the farm community.
Yeah.
And today's special guest is a person who has a pretty good handle on what's going on in the farm community. And I'm proud to bring in Legacy Wealth Management special guest today, Sarah Heinrich, who is Farm and Ranch Director at KFGO in Fargo. Sarah, I think we've got you via the magic of the internet today.
We do have the magic of the internet, and I'm really happy to be joining you. It's a good time to be talking about agriculture right now. Certainly some challenges, but some upside as well.
And I see that you've got the nice NDSU banner going on behind you. That's pretty cool, too.
I appreciate you bringing that up. So my husband and I are both alum, and so go herd. Everyone in my family went to NDSU, and so there's a pretty strong passion for bison.
I can understand that. We're, of course, big bison fans down here, but we're also equal opportunity guys, at least some of us are. We support the UND Fighting Hawks, too, as long as they're not playing the bison.
Exactly.
We're with them, too, because they are from North Dakota. Sarah, you've spent a long time in agriculture. I know that you're actually out on a farm and ranch yourself, but I understand that you get to travel around the state quite a bit. And in fact, just recently, I understand, earlier this week, you put on 600 miles on your truck. Tell us about that trip.
I was on the road, just in Williston, actually, and things went from a little bit, I guess you could say, from dry to drier. And so the drought conditions definitely intensified as we moved further to the western part of the state, which was unfortunate. I always want to say, if you think that we're dry here in the central portion of the state, make a trip out to the northwest corner, because it's certainly more exceptionally dry. And really, there's just this really deep pocket, kind of in that Minot, Garrison, Washburn area that's really, really dry. And they're actually in another category of drought. Now, all of the drought monitor conditions, though, have been out before the latest drought monitor that will be released here in the upcoming days and before this previous moisture that we received this week. Either way, it hasn't been enough moisture to really bring us out of some of those drought categories. That's really what it boils down to. And so even though we're all extremely grateful for the moisture and it was so needed, certainly more is needed to bring us out of some of these drought categories that we're facing.
At Legacy Wealth Management, of course, we often spend a lot of time talking about investing in the market and which securities to own. But the reality is, here in North Dakota, a big part of an investment is for our farm community and how much they have invested in their farm. So what you're telling us is that this drought is hitting the farm population pretty hard this year.
Absolutely. And when we take a look at like the last 3 years, things have been really hard on a farm and ranch. We've had just really, really dire and bad conditions. Mother Nature certainly hasn't been our friend. When we look at what we're talking about with moisture conditions, we went from extreme wet into extreme dry. I think every producer right now is very thankful to be getting this year's crop in on a timely basis, which takes a lot of stress and pressure off of things. But if we don't have that moisture to get that crop going and get that crop out of the ground and growing, things are going to be pretty tight on the farm front. We have seen an increase in commodity prices, which we're extremely grateful for. But if we don't have a crop to sell, even if we have good commodity prices, it's not going to make a whole lot of a difference.
Well, that's a great point, Sarah. And one of the things that we have followed for some time on both Investment Talk TV and Investment Talk, our radio version, one of the things we followed for a long time is the price of some of those commodities, including soybeans. And boy, about a year ago or so, when we were in the middle of the trade difficulties with China, our soybean price was way down. Did it get as low as $6?
Not quite that bad, but we did see a huge decrease in that soybean market. And we haven't been able to just put cents back on that market. We put dollars back on that market. With the latest WASDE report coming out from USDA, they're predicting an average market price at $13.85 a bushel on these new crop soybeans. At that, we're making money. I mean, that's a great price, and producers can certainly make money at that. Now it's kind of a twofold situation. We're talking about a crop that we're not sure how many bushels we're going to get out of it because it is so dry. And so if we do see yields decrease, we might not see that net farm income rise substantially just because we're going to be taking fewer bushels to market. But that commodity price certainly has been a welcome sight.
And one last point on that before we go to Brady, who has a question or two for you. Do you find that a lot of farmers out there, frankly, just put their soybeans in a bin when the prices were so low, and they're able to come back now, or what do you think about that?
There wasn't a lot of old crop to be selling when we were seeing these just crazy high runs within the soybean market. And that's why we were seeing those high runs, is because we didn't have a whole lot of old crop left on the farm. A lot of farmers had sold off once we hit kind of that $10 mark. I think most producers are saying, hey, at 10 bucks, we can make some base hits. We can make some money here. And so a lot of that crop got sold off. So did a lot get sold off at the highs? Typically not. They always say that farmers tend to sell in a downtrend market.
Right. Very good.
Sarah, we deal with a lot of farm investors at Legacy Wealth Management. And, one of the things that we see a lot is, family farms where their intention is to pass it down to, their sons and daughters. And the concern is there's multiple concerns. One, keeping people in the industry. So I'd like to see kind of, your thoughts on that. And also the concern as far as, the step up in cost basis when it comes to passing land and other things on to, family members and children. So, what do you see from that standpoint? Are we getting a lot of fresh blood coming in as people moving? Are they coming from other states to take up farming? What do you see out there when it comes to that from a North Dakota standpoint?
That's a great topic to be talking about. It takes a lot of work to put a farm on now. We certainly aren't making it on 50 cows and a few hundred acres anymore. And so I think that every farmer would agree that they've had to get bigger in order to survive. And so I think that those really well-established operations that have been able to grow with the times and kind of establish themselves, those are getting passed down to the next generation. Whereas we're maybe seeing some of those really small farms, maybe not the same opportunity, or maybe they're seeking some off-farm income in order to try to help make that go.
Sure. And again, one of the major concerns that we've seen recently from the administration is the potential of removing certain benefits from a tax standpoint. For example, the step up in cost basis, where the children are able to come in and start with a fresh, not a major tax burden of inheriting land versus maybe purchasing it. Do you see a lot of concern with that, and the potential of that coming to pass?
Absolutely, that's a huge concern. American Farm Bureau is following that really closely. Senator John Hogan is following that really closely. And I think a lot of producers are very concerned about that, because when we talk about the tax situation, that can get farmers into a whole lot of hurt, you could say, in a hurry, just because our asset base is so large, because obviously, we own and operate an entire business. And so that's something that I think is on a radar of a lot of producers.
Sure.
My personal feeling is, Sarah, that a lot of those potential tax changes that people talk about may not come to pass anytime in the near future, because they do represent some pretty big changes, and it's unlikely that they could get a full majority to vote along those lines. But I think they bring them up to emphasize the fact that, we spent a lot of money in the last couple of years, and somehow the government has to find a way to be current on paying those bills and so on. The other thing that we see from time to time, Sarah, among our farm population, are we see farmers who have thought about retirement, and so perhaps they do retire, and they may not have anyone left to pass the farm off to, so they rent it out to neighbors. And I think one of the things that Brady and I notice is the percent of return that they get on that rental. And quite often we're seeing farmers who will rent out their land, and net, after all expenses and taxes and you name it, they may be earning 3 to 4 to, if they're lucky, 5% on a rental thing. Would that be similar to what you see?
Probably. I mean, it really depends upon the area of the state that you're in. In that western portion of the state, those rental rates aren't going to be nearly as high as what we're going to see in like a eastern part of North Dakota, just because of the productivity of the land. But I think that that's becoming more and more common. You're having these producers who are maybe wanting to downsize, maybe wanting to retire. They still want to take in some of that investment, but they aren't ready to let that land go.
Very good.
Yeah, and I think that's where emotion comes in a lot of the time. The farm's been in the family's hands for generations. It's hard to let that go sometimes. And the other part of it is sometimes these farm operations, all of their assets are tied up in the farm, which makes it a little bit difficult to create an income when you're no longer farming. So definitely some concerns when it comes to different operations here in the state.
I know one of the many things that we deal with when we work with potential clients who are in the ag industry is exactly what Brady's talking about, is that real hesitancy to give up the family farm, which is totally understandable. I mean, you've had something in the family for many years. it's hard to give it up. But I think one of the things where we try to be helpful and we try to become very proactive is when somebody comes in to see us and they have some land, maybe they've inherited it, hopefully with a step up in cost basis so they don't have to pay a lot of taxes. And they're looking at perhaps liquidating some of that or maybe selling off some of their equipment. And then they wonder, now, how am I going to get a retirement check every month?
Yeah.
How am I going to get that? And that's the kind of area that we often deal with. Sarah, it's always good to have you on the show, and I hope we can have you back again another week. We have a number of other topics, believe it or not, that we have to cover. But any last-minute words of wisdom about the ag industry in North Dakota?
I think there's some major positives going on right now. We were able to get that crop in on a timely basis, and I think everyone is just hopeful that we get the rains now to carry it through. It was really nice to be able to get our work done on a timely basis compared to what we've seen the last 3 years. It's been a great change.
Well, very good. Sarah, it is good to have you on the show, and we're going to have you back again. That was Sarah Heinrich, who is Farm and Ranch Director for KFGO Radio, covers the entire state with her job every week. Sarah, thanks so much. We'll look forward to having you back again.
It was wonderful joining you.
All right. You know, Brady,
Yes.
as we move on Investment Talk TV today, a lot of good things to talk about. The market has certainly been wild and crazy.
Yes.
We also had a Legacy Wealth Management investment question of the week last week.
Yes.
And let's go into that next segment, the Legacy Wealth Management investment question of the week.
It's now time for the Legacy Wealth Management Question of the Week.
All right. Well, Brady, what do you got over there,
Well,
buddy?
I think first we'll talk about the contest. You know, we've had this ongoing contest, Paul, for the month of May, really, that ends here, and we're going to announce the winner. And basically, the contest was, what is the end of the Dow Jones at the end of the month? And we're going to announce that winner actually next week. Because we have another question that we asked just last Sunday, and so we're going to answer that now. And that question,
I
Paul,
wasn't here, was I, Brady?
You weren't. I was here by myself. I had Steve Poitras here to help
Yeah,
me
I
out.
know.
So thanks, Steve, if you're watching. I appreciate you saving me on that one. But the question last week, Paul, was, let me just read it so I don't screw it up here. Since the introduction of the CPI, or the Consumer Price Index, what is the highest yearly inflation rate recorded here in the United States of America? And of course, you know, that goes way back to, I believe, 1917, and that was when the CPI was introduced. Actually, I think 1913 before that, but the highest rate was in 1917, 19.66%. Pretty high rate, even considering some of the rates you saw in the 70s and et cetera. Congratulations to Gary in Grand Forks. You got that right. Just stay tuned for your new car. It should show up in a little tiny envelope here any day now. So pay attention for that. Thank you so much for participating. We had a lot of guesses, not all good guesses. Some of them were way off. But, you know, thank you for participating. And again, if you think you have a question you'd like to see on the investment question of the week, send us an email at team@legacywealthfargo.com, and we will consider it for future episodes.
Boy, Brady, that's amazing. You talk about a rate of inflation of over 19% in a year. Kind of makes our current rates of inflation seem pretty paltry, doesn't it?
Well, it does. And, you know, a world war certainly will tend to do that. You know, but we've seen our own concerns when it comes to inflation here recently, Paul. Obviously, when we saw the concern a few weeks ago that inflation was coming higher and faster than we expected, the markets took a little bit of a dip. So certainly a concern, even in a year where inflation isn't quite at 19.5%.
And we're going to talk about that situation a little bit later on in the show, what impact inflation has had on the market performance, because every time the investing world gets concerned about inflation, it seems to hammer that NASDAQ pretty thoroughly,
Sure
doesn't it,
does.
Brady? You know what? Every week we take a look at the broad economic trends that have been impacting the market. And at Legacy Wealth Management, we think it's important to take a look at those indicators and those items that are moving the market. We call this next segment the Legacy Wealth Management 5 Points in 5 Minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this
5 Points in 5 Minutes.
Well, you know, Brady, we talk about inflation, we talk about some of the other things going on out there, but point number one talks about how well the market has done so far this year. And, you know, it's been a kind of a surreptitious market. I love that word. It doesn't seem like it's been going up, and yet the numbers are fairly high. and the S&P is recording some big numbers. What have you got for point number one?
Point number one, Paul, after 20 weeks of calendar year 2021, the S&P 500 up 11.3% year to date through the close of May 21st, 2021. That's not a bad run.
Well, that's a huge number when you think about it. 11% through about 5 months.
You do that every quarter.
Yeah,
you'd be
we're
pretty
going to be
good.
well over 20. And
You bet.
most of us think that the second, third, fourth quarters are going to be better than the first quarter was,
You bet.
without a doubt. Hey, let's talk about inflation using the Consumer Price Index as the measurement. It was up 9% in 1978, 13.3% in 1979, followed by 12.5% in 1980, and about 8.9%. Those are huge numbers, Brady.
Yeah, not so far in the past either. So they still are around, and
Yeah.
it certainly can influence it. So not quite as much as we just talked about at the World War I period, but certainly some periods back there where inflation was very high and much higher than it is today. Point number three, Paul, American drivers are projected to use 9 million barrels of a day of gasoline during the summer of 2021. That's up from 7.8 million barrels a day last year, which is the pandemic summer of 2020, but still down from the previous year at 9.6 million barrels per day back in the summer of 2019. So a little bit of ways to go to get back to normal, I think.
Good information. Point number four, Brady, do you ever use a credit card?
I do. I like to get the points.
I know I do too. I'm just kind of teasing. I know you enjoy using it. We both do. That's a good thing.
You bet.
Total U.S. credit card debt peaked at a record of $930 billion as of December 31st, about a year and a half ago. That was pre-pandemic, but it has since fallen 17%. That's $157 billion with a B to $773 billion as of the end of March. Brady, why do you think credit card usage has fallen a little bit?
Well, I guess there's a few different reasons, but you see a lot of stimulus right now. People got cash in their hands and they're quick to spend it. So that actually ties into the next point, Paul. The personal savings rate here in the United States in the first quarter of 2021, 21%. The personal savings rate way back in the first quarter of 2001, just 5%. Of course, the personal savings rate defined as savings, that's to say after-tax income less consumption spending divided by after-tax income. You know what? People have money in their pockets, and it's nice to see some of that getting put away. But there's also concern, we talk almost every week about, margin debt, for example, people investing and buying things maybe when they shouldn't. So there's some good things that they're maybe not putting on their credit card, but that doesn't mean you want to go buy stocks and bonds on debt as well. So be a little bit careful. It's nice to see a higher rate of savings overall.
It brings up another topic that I hadn't originally planned to talk about. But if the savings rate is up, you wonder where they're putting that money. And we always talk about putting it in an account where you receive less than 1%, and they're not even giving out toasters anymore.
CDs will do that right now.
Yeah, it's just kind of a shame to let your money sit in that type of an area. It is generally safe, however.
Yeah.
Meaning that it's not going to go away. It just doesn't grow very fast. And unfortunately, when inflation is kind of building up,
Exactly.
We all get sticker shock. I mean, you go out and you take a look at a new car and you say, holy cow, the prices are way up. You take a look at a price of a loaf of bread, and inflation is there. It's coming around.
Well, and also, if people are getting stimulus money and they have extra money to save, the idea is that that's spent and put back in the economy. And if people are saving, it's not really doing what it's intended to do either. So there's always a double-edged sword when it comes to those types of investments.
Brady, can we ever get to the point where we give away toasters at Legacy Wealth Management? We
Get
could do that?
Those nice fancy white ones you get from Walmart for $4.
Well, no, we're going to have to step up a little bit from there. Come on.
I'm sure we could find something.
I know we can.
We'll get
I think
Gary
we
and Grand
should.
Forks a toaster.
We should. And
I
we
like
should,
it.
When people come in to see us, we should give them we love giving things to people when they come in to see us. Now, that mug you've got there will be just one of many things that are kind of fun to give away.
We also have lots of delicious varieties of wine.
I've heard that, Brady.
Yeah. I sample it from time to time.
I know you do. And there's a good reason why I stick around so late in the afternoon.
That's
and
right.
After everyone is
There you
gone.
go.
Hey, you know what? About this time every week on Investment Talk TV, Brady and I, two advisors at Legacy Wealth Management, take a look at the Stock Market Week in Review. Let's do that right now with the Stock Market Week in Review. Okay. Let's take a look at that first slide, shall we, Brady?
Sure.
That the Dow Jones average, and I think that's showing us How far back is that going? That's the
About a week, I think. Yeah.
5-day average.
It's a nice little rebound. Some of the inflation concerns have started to fall off or wane a little bit, which is nice to see.
I noticed earlier in the week the Dow Jones average was hanging around 34,300 points.
Yeah.
And in a way, that's pretty good. In a way, it's got a ways to go.
Yeah.
But really, it's only about 3% off of its high, I believe.
Well, yeah, and you're still seeing a lot of positive earnings reports come out here at the end of earnings season, and a lot of optimism still out there as far as the recovery and people getting back, out in the world, spending money and buying things.
So let's take a look at how the Nasdaq chart compared to that Dow Jones average chart. Now that seems to be generally higher, doesn't it? Because
Absolutely.
the Nasdaq has been performing better over the last few days.
Yeah, and the Nasdaq has been trailing both the S&P and the Dow Jones here year to date. Because, as inflation's those growth type of companies, specifically technology, gets beat up a little bit. But as those fears start to go away, guess what? People jump back into that area, and those growth type of companies do better. So far, we've seen a nice little rebound. There's still plenty of room to go. But, growth always tends to do one thing, and that's grow.
Hard to argue with that. In fact, one of the things that both Brady and I like to say about investing in the market, because we always get the question, don't we, Brady, that people say, well, is this a good time to be investing because, gosh, the market's at such a high point? Or they say, what if it goes down lower? And one of the things that I've noticed after over 30 years of being on this side of the table as an investment advisor, and I noticed it even before that, is that if there's one thing the market always seems to do, Brady, it always seems to find a new high.
Yeah.
Now, the question is, of course, when will it find that new high? And we don't have the answer for that, but I will tell you this. We believe that the market's going to find a new high one of these days, and we just want to be on board for that when that happens and putting people in the right areas. Speaking of the right areas, we picked 3 individual stocks that we'd like to take a look at in the closing minutes of the show today. 3 individual stocks that all have some different things going on for them in different industries. Brady, let's talk about that first one, Southwest Airlines.
Southwest Airlines, LUV. I love their title. Southwest, that's a 1-year chart there, doubled in the past 12 months. Not bad. Of course, that's under the impression that airlines are getting back to business and opening up more lines. Pretty much flat, however, since March. Hasn't really done much, but year to date, up 50%. So not bad. It stalled out a little bit here recently, last couple of months, but of course, people are waiting for news of that to get back up and going.
When did Southwest Airlines show most of its gains in the last 6 months?
Yeah, right at the beginning of the year here. So I think it was from February 1st on. It really jumped, and then it kind of flattened out in the 15th or so of March. So, let's hope they keep on going. Southwest Airlines does a great job when it comes to the consumer experience.
And it is an interesting strategy that some people adopt when they say, hey, let's pick on a company like the airlines companies or the cruise lines, something that's been beaten up during the coronavirus pandemic, and wait a year or two for that to come back because, I personally think that the airlines are not going away.
Well, I don't think the government will let them fail. So let's take a look at the next slide here, Paul. British Petroleum. We'll take a quick look at this. Up a year ago, 5% dividend there, but it had a bit of a dip earlier in the year. So,
you know what? We're actually out of time, Brady. So for Brady Brunsvold, I'm Paul Meyers. I want to say thanks so much for listening to Investment Talk TV. We'll be back again next Sunday.